Hey guys, welcome back to the channel. Today is October the 22nd. It is Saturday morning, and I want to share something with you guys that is actually new to me, and I'm currently in the process of actually backtesting it myself. It's a strategy that a friend of mine shared with me just recently, and I thought, hey, if it's new to me, I'm going to share it with the team, and we'll kind of walk through this chart here over the last, maybe say 5, 6, 7 days, whatever the case is, and I will continue backtesting it myself over the last several weeks and months. And then I'm going to test it going forward live. But everyone that's currently watching the channel today, you guys know that whether you're a newcomer to the channel or not, that I primarily trade supply and demand. That's a strategy that, I have a strategy that I use centered around supply and demand. And I've been trading that for years, okay? It's something that I devised and put together that works for me, and I'm profitable doing so. And I have tons of videos on the channel showing my live recorded sessions and video topics surrounding how, the strategy itself. But I thought I'll give this, what's called the open range breakout strategy, kind of a test to see if it's something that really works. And I trust this person because they actually are a highly profitable trader. But they have an arsenal of different strategies they use depending on setups in the market or what the market's actually doing. But, me, I'm always open to new things, just trying to take a look at things. And it just came about through conversation yesterday. So I said, well, if something new to me, maybe, I'll create a video and we'll kind of look through the last few days and see if it actually what took place. So basically, it's a strategy that occurs within the first 15 minutes of the market after it opens. Okay, so basically from 9:30 to 9:45, and it's using a 5-minute chart. And I don't use time-based charts, but again, I'm open to suggestions or whatever the case is. I'm open to things that people bring to my attention, whatever the case is, just to kind of test. Not to say I'm actually going to use it, but you never know if it's something that actually works. You possibly could add it to your trading plan, right? Something that you may want to use as part of a strategy that it may work if you see it actually if you see that it actually unfolds and it works. Okay, so but for me, I'm going to be backtesting, as well as demoing it during the live session. Okay, but basically, the way it works, you take a 5-minute chart. And then you mark off the first 15 minutes of the market from 9:30 to 9:45, and you see you mark off based on the body of candles, pretty much. So whatever the lowest point is within the first 15 minutes, so within the first 15 minutes of the market on a 5-minute chart, you're going to have 3 candles, like right here, 1, 2, 3. Actually, market open here. Okay, so I guess it would be start from here, 9:30. 9:35, 9:40, and 9:45. This is yesterday's price action, okay, or chart, okay, on a 5-minute chart. So you mark off which candle within the first 15 minutes has the lowest point, okay, meaning the candle that has where the body is, lowest, the low point, and then the high point, okay. So here's the low point, here's the high point, okay. Within the first 15 minutes from 9:30 to 9:45. And then it's basically, and you have to have volume, because volume is very important to when we're trading. For me, it is definitely important. Volume is everything, because it really shows you that picture of the momentum in the market, which way the market is actually moving in a sense. And here is a simple volume indicator that I load to the chart, and it shows you basically the selling volume and pretty much the buying volume in the market, okay? And the way it works is you take the breakout after 9:45, depending on the direction of which way the candle moved next. Meaning, if it breaks and price continues, like if this is the close of this candle right here, from body to wick, top end to top end, and the mark at 9:45, this candle here closes. If the market continues with volume or buy volume pushing to the upside, and it breaks above the body, okay, this candle here, all right, and then it breaks above the wick of it. At the break of the wick, and with volume following behind it, buy volume following behind it, you can enter a trade as a continuation to go long, okay. Same thing here. If the market actually broke below the lowest point right here within that first 15 minutes, okay, right here, broke below not only the body of this low point right here of the first 15 minutes, but also started breaking below the wick end of this candle, the bottom end where this wick is of this candle. It didn't do that. So in this instance right here, it's what's called the open range breakout trading strategies, if I'm told, okay? And first 15 minutes, close of this candle here, price continue pushing higher, breaking above the wick. If you look down below, there was volume to continue, enter to a trade to go long. All right. So that was yesterday. I'm going to also take a look at the next day or the previous day, not the next day, but the previous day, and I believe that was the 20th, which was Thursday. So let's look at the first 15 minutes of the market. All right. And again, this is a trading strategy that I wanted to share with you guys. Something that a friend of mine just recently shared with me, and I thought I would just kind of take a look at it, while I have make a video about it and share it with you. And not telling that you have to, use it in your trading or anything, but you may be interested in taking a look at it, because I'm taking a look at it myself to kind of see if it actually, how it pans out. So the first 15 minutes on this day here, market opens up right here, okay? All right, we have a close of a red candle there. So 930, 935, 940, 945. So the lowest point is going to be right here, the body of that red candle, okay? Right here. And then the highest, point is going to be 945, actually right here, okay? All right. So, and whichever way, at 945, price moves from there. So if it breaks above this area here, which it did, continue pushing higher, you take the break above the candle and go long. So we got volume below us, still showing us there's buy volume. Here's 945 right here, and price continues pushing higher with more buy volume coming in. Volume does slowly start to dissipate, but still there is still buy-in in the market here, because the market continues pushing higher, and it takes out the highest point of the first 15 minutes of the market. So I guess you would go long. All right, so let's take a look at another day. The 19th, which was last Wednesday. Okay, I marked this off yesterday. I was taking a look at it. I think I marked the last few days behind that off. So let's see. 930 was 925. 930 was right here. 35, 40, 45, right there. So this is the highest point, and this will be the lowest point. And then from there at 945, let's see, the market continued pushing lower. It broke the lowest point of the first 15 minutes, and then you see that below volume, they're still selling in the market, and the market continued pushing lower. Now, how much lower? I guess the thing is you're supposed to get into the trade on the continuation of the breakout after the first 15 minutes, depending on which way the market shifts or moves from there. So at 945, the market was right here, still pushing down. It broke that low point. The moment it breaks that full candle to the downside, pretty much starts breaking it at even including the wick, you can go short, and it works here too. So let's see, if you got into a trade right here at 3708, the market continued pushing lower down to pretty much 3700. So that's 8 points almost right there. All right, let's go back a day prior to that. 930 right here. Okay. 948. Let's see. Okay, so here again, this is October the 18th, it looks like. And I guess it's last Tuesday. First 30 minutes, first 15 minutes on a 5-minute chart, 930, 935, 940, 945. The highest point, looking at the body of the actual candles, is right here at 3774. The lowest point, which was at 940, which happened at 945, is right here at 3763. And from that point, depending on which direction the market moves, either breaking lower or taking out the tops, the top end here, which is the highest point within the first 15 minutes, price actually pushed lower, and there was sell volume to show it below, and price continued pushing lower. So if you got in here, let's see, 945, right at the break of the wick of the candle, at 945, as the market continued pushing lower, You get in at 61, I guess, and the market continue pushing lower down to 47. Well, that's pretty interesting. Something I'm going to have to really take a look at and kind of backtest and then test it in the live session as well. So again, it's called the open range breakout trading strategy. You pay attention, close attention, what happens within the first 15 minutes. Marking the highest and the lowest point based off of a 5-minute chart. Once the last candle at 9:45 closes, that last 5-minute candle at 9:45 closes, then you see which way the market's going to push. Is it going to push through the highest point of that during that 15-minute period, or that lowest point within that 15-minute period? Whichever way is volume, showing that the market pushes through, then you basically take a continuation trade going in that direction. Here you'll be going short. So let's go back to another day, which I believe was last Monday. I think I marked this off. No, I didn't mark it off completely. I was taking a look at it. 9:30, 9:35, 9:40, 9:45. So here's the lowest point right here. And then the highest point was right here. Okay? But you have to get a break of a candle above the wick, I was told. Okay? So at 9:45, this is the candle at 9:45. So your low point, your high point, okay? The market pushed down with sell volume, you see below, but it didn't break the low point nor the high point here at this point. It then pushed up, broke above the wick here, and I think that's where you enter at 36.96. Go long, and you pick up 4 points there, almost 5 points right there. All right, so that's pretty interesting. I guess you also have to pay attention to areas of supply or demand below you to kind of see, not supply or demand, guys, I'm sorry, support resistance below you to kind of get an idea where those areas may hold true at, or price could actually stop at or pause at or reject. So let's take a look at this day here. This is the 14th. I think I may have already covered this day. No, not yet. Nope. What day is the 14th on? Not sure, but anyways, let's mark off the first 15 minutes after the, once the market opens. 9:30, 9:40, 9:35, 9:40, 9:45. So let's mark off the highest and lowest point. And the lowest point is going to be, let's see. Nope, that's 9:45 right there, okay. Lowest point is going to be right here. And your highest point is going to be right here. Depending on which way the market moves, after the first 15 minutes, which is right at 9:45, it continued breaking below. It broke the full candle, the break of the wick. Sell volume down here at the bottom, you see, still coming into the market, and you go short. And then if you did that, look how far the market ran. This is really interesting. I'm going to continue, guys, really kind of take a look at this here. I went ahead and kind of backtest a couple of days, whatever the case is, but I'm going to continue doing so, and then the upcoming week I'm going to test it out as well. So let's see here. First 15 minutes. We are right here, 9:30, 9:35, 9:40, 9:45. Let's mark it off. Arrow, 9:30. So the highest point is going to be right here. The lowest point is going to be right here. Pretty much. And which way did the market move from there? From there, you got buy volume coming in. You can see here down below, right at the 9:45 mark. First 15 minutes, the market breaks higher, starts taking out the highest point. You take the trade going long, and look what happens. Let's look at one more day. One more day. Okay. Marking it off here to see. So this day here is the 12th. Okay. First 15 minutes. 9:30, 9:35, 9:40, 9:45. Okay, so let's see. All right, so 9:30. The lowest point is going to be down here, and then the highest point right here at 9:45. Okay. All right, and let's see. Now this must have been kind of a ranging day. So this is the only day so far where I say it's kind of iffy in a sense, but because price didn't really break above the wick of the candle in a sense. It didn't break below for sure, but you're looking for the breakout of either, which one breaks first, the highest point or the lowest point. And it looks like price broke first above the wick of the candle at the highest point, and I guess you could take a trade, was pick up 3-4 points right there. But it was, this market kind of ranged this day here, so that's a little tougher. So that's the only day so far that I would say that I'm not saying that it didn't work, but it was a little tricky there, I'd say. So let's take a look at this one more day then, and then I'm gonna kind of from here I'm gonna back test it myself, and then I'm gonna also, like I said, test it in the live market as well. Okay, so I only have 10 days loaded to this chart here. This is on a 5-minute chart. But out of the 10 days, there was only one day where it didn't, I'm not saying that it didn't work, but it was just a little bit questionable, because the fact is the market ranged, moved sideways this whole session right here. But this is going back from the 12th of October to the 21st, which was yesterday, of October as well. So, and looking at that, there was only one day that was in question enough, and that was it. I'm going to continue back testing it week after week after week going back, but then I'm also, like I said, I'm going to test it during the live session next week, and going forward as well, and kind of see how it works within that first 15 minutes. I'm going to keep my eye close on it, but I wanted to share this with you because a friend of mine shared it with me, and I thought that maybe it could be something that someone out there may want to try themselves, be interested in taking a look at. But again, me at this moment, I'm not using it, guys. I'm just going through the motion of back testing as we do when we are just have strategies or whatever the case is, or come across things that we want to take a look at. I'm taking a look at it. I just want to see, and back testing and moving forward, I guess how valuable it is, if it really pans out or really works. He's a very profitable trader. He does use it, so I trust that he's, he's doing well with it. But so far what I've seen based on 10 days, like I said, there was only one that was kind of questionable, that it works. But, not every single day does, are people 100%, I say, profitable with every strategy. I have a thing about, being green every day and not in the red. Not saying you won't have a losing trade, but this is one particular strategy that primarily just works during the first 15 minutes. So it may not work every single day, but the thing about it is, if you look at, I guess, percentages or based on margins, if it works 90% of the time and you're able to really profit highly from it, within a 1 week period, then, or even over 2 weeks, because this was almost 2 weeks. Well, this was 10 days. Yeah, 10 days of trading. So it's 2 weeks of trading right here. So if it's like a 90% or even maybe even an 80% win rate or margin, then to me it's profitable, in a sense. It's probably something that I would be interested in taking a look at. But I'm not taking any plays on anything, because you guys know I trade supply and demand. I have to have 100% confidence in everything I do when I'm trading. So supply and demand is my cornerstone, is the bread and butter of how I trade. So, but I'm going to take a look at this, and I will, like I said, back test and test it moving forward and see how it works out. But again, I just want to share with you guys, and hopefully you may want to try it out yourself and go through the motion of what I'm getting ready to go through, trying to see if it works. And I'm just going to pay strict attention to the first 15 minutes, engage it, and see what happens. But anyways, I want to share that information with you. If you're someone that's new watching the video right now, guys, and you haven't subscribed to the channel, please take the time to go ahead and sub to the channel by clicking on the red button below. Next to it, also click on the bell. Make sure you have your post notifications turned on so you never miss one of the uploads here on the channel. I am a price action trader, pure price action trader, and I trade just simply using a strategy that I've devised and put together surrounding supply and demand. So if you're interested in the content here on this channel, you can also join us over in the Discord community. It's a great community filled with future traders, and we have over 500 members now. So people are joining for a reason, and it's a great wholesome group where we converse, talk about the markets each and every day. I'm not saying we talk about it live, but we have this chat room set up, especially the trading floor, to where we basically as traders come together collectively and talk about levels or zones of interest. There's also, you can ask questions, question and answer form if you have questions about certain things. So it's a general chat section where you can converse and talk about trading surrounding the future markets as well. So come over and join us. There's a link down in the description portion of the video below. All you have to do is click on it, invite yourself in. It's free of charge. And yeah, we welcome you in. Outside of that, that's all I have to share with you today. Hope you found some value in the content of the video. And I'll see you guys in the next one. Take care.